Welcome back to the deep dive. There's definitely a buzz, you can feel it, right? A palpable hum in the digital asset space this week. It feels like something genuinely significant is unfolding, and I'm really eager to understand what's truly driving it. We're talking about something that, let's be honest, many people dismissed, maybe thought it was a distant dream, perhaps even impossible. Our deep dive today is tackling a monumental shift. The imminent launch, yes, the launch of exchange-traded funds, ETFs, for two major altcoins, XRP and Dogecoin. And this isn't just, another headline flying by. It feels profound.
Yeah.
Like it could fundamentally redefine how traditional finance interacts with these digital assets and maybe even with the whole Web3 world.
Exactly. And our mission today, like always, is to really get under the hood, to unearth the profound implications of these ETF launches. We need to look beyond just the immediate price bumps, understand what this means, not just for XRP, not just for Dogecoin,
but for the entire altcoin market and for traditional finance too. And yeah, the future of Web3, that whole next-gen internet built on decentralization, blockchain, user ownership. So to do that, we've been, meticulously digging through insights from a whole range of sources, Cointelegraph reports, deep Bloomberg ETF analyses.
Okay.
CoinShares data, which is great for tracking those asset flows, and naturally, the very latest SEC filings that actually paved the way for these approvals.
Absolutely. And that phrase, monumental shift, it really resonates. You've been digging through all this data, these reports, but I'm curious, beyond the obvious headlines, was there anything that genuinely surprised you? Something unexpected lurking in the analysis? Because this deep dive, it's really for you listening, whether you're an investor glued to the charts or maybe just curious, trying to make sense of this rapidly changing landscape, or maybe you just want to grasp the huge shifts happening where finance and tech collide. So yeah, get ready. Things are about to get very interesting.
That's a great question. And honestly, what really stood out to me, especially digging into the Bloomberg analyses, was something kind of subtle. It's the shift in how regulators seem to be viewing different kinds of altcoins.
Oh, interesting. Not just a blanket thing.
Exactly. It doesn't look like a blanket, okay, altcoins are fine now. It appears much more nuanced, like they're recognizing distinct categories. We'll definitely unpack that. But it really challenges that sort of monolithic crypto view that traditional finance often defaults to.
Fascinating. So not just opening the floodgates, but maybe a more strategic, sophisticated approach from the regulators. For years, the crypto world has been waiting, hasn't it? For traditional finance to truly open up beyond just Bitcoin and Ethereum. A lot of people doubted it would ever happen for altcoins. They were dismissed as too volatile, maybe too legally murky. But this week, well, that skepticism is just being shattered. So let's not just talk about what happened. Let's get into how this central announcement has completely changed the game. ETFs for XRP and Dogecoin are officially set to launch this week. Confirmed. Not a rumor, not speculation. It's happening. And that marks a truly, truly significant milestone for digital assets.
It really does. And to put that into immediate context, these aren't just, any altcoin ETFs. Our sources, particularly those detailed analyses from Cointelegraph and Bloomberg, they confirm these are the very first wave, the first altcoin ETFs getting the official green light and launching, following, of course, those landmark approvals we saw for Bitcoin back in 2024 and then Ethereum in 2025.
Right. The sequencing is important.
It is. It shows a progression, right? A gradual opening, you could say. But it's really fascinating to think about why these two specifically, XRP and Dogecoin, why are they leading this first charge? It's definitely not just about market cap, although sure, that plays a role. For XRP, well, the clarity that came after the SEC lawsuit was huge. That offered regulators a much safer, more defined legal footing.
That court ruling was key, wasn't it?
Absolutely key. The court saying XRP, when sold on exchanges to retail folks, wasn't an unregistered security that gave a level of regulatory clarity. It dramatically cut down that securities law overhang it had, and that specific distinction likely gave asset managers and the SEC the confidence they needed to move forward with a regulated product. It sets a powerful precedent, really, for other assets maybe facing similar legal questions. But then you look at Dogecoin, and it's a completely different story, isn't it?
Totally different vibe.
Yeah. The sheer, just sustained retail interest, its unique origin, kind of fun, non-threatening, not really trying to compete with traditional finance or be some complex utility token, that might have given regulators a different kind of comfort level. It suggests they're maybe broadening what they're willing to consider, moving beyond just utility to look at things like sustained community value, market demand.
It's a different paths to the same outcome. essentially.
Kind of looks that way. And the fundamental advantage here, the big win for traditional investors, is getting that exposure to XRP and DOGE without the complexities, without the often, frankly, intimidating aspects of holding the tokens directly.
Yeah, setting up wallets, seed phrases.
Yeah.
It's a barrier.
It really is. Think about it. Direct ownership usually means digital wallets, understanding seed phrases, figuring out different crypto exchanges, securing private keys. It's a steep learning curve for a lot of people. With an ETF, none of that. Investors don't need to worry about any of it.
Just buy it like a stock.
Exactly. They just buy shares of the ETF through their existing brokerage account. Same way they buy Apple stock or an S&P 500 fund. It's the ultimate simplification, really.
That is a huge simplification, no doubt.
Yeah.
So, okay, bridging that gap for mainstream investors, that benefit is clear, immediate, tangible. But beyond just making it easier to buy, what are the deeper impacts? The systemic implications our sources are flagging as truly transformative.
Right, and that's where we get into the core of why it matters, pulling from our sources. Several really key themes jump out, going way beyond just convenience. First off, you've got this monumental leap in mainstream adoption and enhanced legitimacy.
Okay, legitimacy, that feels big.
It is big. The approval of these ETFs, it instantly shifts XRP and DOGE into, well, pretty much the same category of legitimacy and mainstream acceptance as Bitcoin and Ethereum. And this isn't just symbolic, it's operational. Think about institutional gatekeepers, pension funds, endowments, sovereign wealth funds.
They're really big money.
Exactly. They often have super strict mandates. They can't just invest in unregulated stuff or things perceived as too risky. ETF approval basically moves XRP and Dogecoin onto their approved list. Financial advisors who maybe hesitated before because of compliance worries or just not being familiar.
Yeah, I could see that.
Now they can confidently present these as viable options for a portfolio, right alongside traditional stocks and bonds. That stamp of approval, coming from within the traditional financial system itself, it fundamentally re-rates these assets. Especially in the eyes of that conservative capital base, we're talking trillions of dollars.
Right.
It lets internal investment committees even start the conversation about allocating, maybe just a small percentage, but allocating something to these digital assets. That was almost unthinkable just a few years back.
Wow. Okay, so legitimacy is number one. What's next?
Second, this is undeniably a landmark regulatory milestone. These approvals, they signal a significant loosening, a shift in stance from regulators towards altcoins more broadly. For years, the regulatory scene for anything beyond Bitcoin and Ethereum has been, well, a minefield. Lots of uncertainty, caution, sometimes outright skepticism, or even enforcement actions.
Yeah, the regulation by enforcement narrative.
Precisely. So this shift begs the question, why are regulators seemingly becoming more accommodating now? Our sources suggest a few things. Maybe an evolving understanding within those regulatory bodies, how these assets work, their tech, their market structures. There's probably also a practical side, realizing that just ignoring this growing asset class isn't really sustainable. It's maybe better to regulate and integrate than push it offshore or underground.
Makes sense.
And like we touched on, XRP's win in the SEC lawsuit provided that crucial legal precedent. It clarified its status under certain conditions, which reduced the legal ambiguity that often stalls these kinds of product approvals. So it's not just an isolated decision for XRP and Doge. It feels like a trendsetter. It points towards a more mature, maybe less apprehensive regulatory environment emerging for digital assets.
Okay, so legitimacy, regulatory shift. What's the third big one?
Third, and this is maybe the most immediately impactful for the market, is the potential for unleashing market liquidity and institutional inflows.
Right, the money pouring in.
Exactly. The expectation, based on our sources, is that these EPFs could funnel billions in institutional money into the XRP and DOGE markets. And we've seen this movie before, right? We can draw parallels to the massive institutional inflows after the Bitcoin ETF approval in 2024. CoinShares reported something like over $30 billion flowed into spot Bitcoin ETFs in their first year alone.
30 billion, wow.
Yeah. And then Ethereum saw that reinforced legitimacy and significant inflows after its ETF approval in 2025. The pattern seems pretty clear. Institutions managing these huge pools of capital pensions, endowments, wealth managers, they now have a regulated, familiar product structure to gain exposure. Our sources, especially looking at the Bloomberg ETF analyses, they're forecasting initial inflows for these altcoin ETFs, possibly in the low tens of billions within the first year, following those Bitcoin and Ethereum patterns.
So real significant capital.
Definitely. And it's not just adding capital, it's often seen as smart capital. It comes with sophisticated trading strategies, which can actually help stabilize markets, deepen trading liquidity, and maybe even reduce some of that notorious volatility we associate with these assets. Things like authorized participants and seed capital will be really important too, absorbing initial liquidity and making sure the market functions smoothly.
Okay, and the last core reason.
And finally, number 4. These new funds provide expanded diversification opportunities. This is huge for traditional investors.
Beyond just Bitcoin and Ether.
Exactly. Before, if you wanted digital asset exposure through a regulated product, your choices were pretty much limited to Bitcoin and then later, Ethereum. These new XRP and Dogecoin ETFs, they offer pathways to assets beyond those top two. It gives investors new ways to diversify within the digital asset class itself, which is rapidly expanding. It lets them tailor their crypto exposure, maybe match it to different risk profiles or potential growth stories, moving beyond just a simple bet on crypto overall towards more specific asset plays.
Like choosing XRP for payments tech focus, maybe Doge for community growth.
Precisely. An investor might lean towards XRP if they're interested in cross-border payments tech. Another, maybe more interested in high-growth, community-driven assets, might pick Dogecoin. And they can do it all from the comfort, the familiarity of their traditional brokerage account.
Okay, that paints a really clear picture of the big why it matters. Now let's zoom in a bit. Let's peel back another layer. What does this mean for the people already involved? The long-term XRP holders, that incredibly vibrant Dogecoin community, and just altcoin investors more broadly. Because this isn't just about big finance moving in, right? It affects the people who've been in these trenches sometimes for years, riding out incredible volatility and skepticism.
Absolutely. That's a crucial angle. Let's start with XRP holders. For them, seeing an XRP ETF launch, well, it carries immense significance. Our sources really highlight the potential here for fuel-driven long-term demand for XRP. This isn't just about a short-term price pump.
It's a sustained buying pressure.
Exactly. From a whole new class of investors who tend to operate on longer time horizons with much larger capital allocations. And crucially, you have to connect this back to XRP's recent history, specifically that post-SEC lawsuit victory.
A legal clarity again.
Right. That legal clarity, as we discussed, was a huge step. But an ETF approval, that could magnify the positive sentiment from that win many times over. Think about it. Even after the legal win, some institutional money probably stayed on the sidelines, maybe due to lingering uncertainty or just not having a familiar investment vehicle that fit their internal rules.
The ETF removes that final barrier.
Pretty much. With an ETF, that regulatory overhang is significantly reduced. It potentially attracts new capital that was hesitant before. It essentially validates the asset in a way that even a major legal victory couldn't fully achieve on its own, at least not for all traditional investors. It normalizes XRP within those established financial frameworks, could help stabilize its price, provide a solid foundation for future growth, especially if institutions are interested in its utility for cross-border payments.
Okay, so potentially very positive for XRP holders. Now, Dogecoin. This one feels different.
Oh, it's absolutely fascinating. Let's talk about the Dogecoin community. This is genuinely unprecedented institutional recognition for a meme coin.
Right. Just saying it sounds wild.
It really does. I mean, think about it. Dogecoin started literally as a joke, a lighthearted poke at how serious Bitcoin was getting. It was propelled by community, internet culture, a lot of irony.
And now it's in an ETF.
And now it's being embraced by institutional investment products that fundamentally challenges our traditional ideas about asset valuation.
Makes you wonder if Elon Musk's tweets are now material information for fund managers.
Well, maybe not quite quarterly earnings calls, but jokes aside, it seriously challenges the old models. What is value in the digital age? Our sources contrast this new institutional backing with DOGE's history. We know from Cointelegraph reports and just observing, it pumped heavily in past cycles based on retail hype alone, often without clear fundamental drivers.
Pure sentiment, often.
A lot of the time, yes. This new development, the ETF, it fundamentally changes the equation for DOGE. It brings in a totally new class of investors, sophisticated institutions, and their investment thesis. It's typically driven by different things than just pure retail excitement. They might be looking at sustained liquidity, maybe the sheer brand recognition, even if it's meme-driven, network effects.
Or maybe even just diversifying their speculative bucket within crypto.
That too. It could provide a more stable, long-term demand floor. It might potentially transform DOGE from being purely a speculative retail play into something with a kind of dual narrative, that grassroots enthusiasm combined with serious institutional backing.
A strange but potentially powerful mix. Okay, so what about the wider altcoin world?
Right, for altcoin investors generally, this is profound. It opens up a whole new realm of possibilities. Our sources really elaborate on what we're calling the ETF domino effect. The approval of these first two, especially given how different XRP and Dogecoin are.
Utility versus meme.
Exactly. It strongly suggests these approvals could pave the way for Solana, Cardano, and others to follow. It's a huge precedent. It implies the regulatory path is clearer now. The operational plumbing for managing these products is established. Regulators seem to have reached a greater comfort level.
So others will likely try now.
Undoubtedly. This will encourage other altcoin communities, project teams, to actively lobby for inclusion. And that means a rigorous process, of course. Assets will need to show significant market cap, strong liquidity, clear legal status, and often either compelling utility or very strong community backing.
It's not automatic.
Not at all. But imagine the ripple effect. Each subsequent altcoin ETF approval would further legitimize the entire asset class. It could create this virtuous cycle. More institutional interest leads to more product development across a broader range of digital assets. It fundamentally shifts the conversation. It's not if altcoins get ETFs anymore. It's more like when and which ones. That opens up opportunities many thought were still years away.
That's a massive shift in perspective, especially for long-term holders and the communities themselves. But let's switch gears slightly. What about the immediate action, the tactical side, for people actively trading these assets? What should they be watching as these ETFs actually hit the market this week?
Good question. For traders, there are several key dynamics to anticipate based on sources like CoinShares and Bloomberg. First, nearly everyone expects significant volatility around the launch dates for both XRP and DOGE.
Almost guaranteed in crypto, right?
Pretty much a given with any big market event. Before the launch, you often see that pre-launch speculation, people trying to get in ahead of the news, driving prices up. Then, after the launch, well, the actual inflow of capital, or maybe the lack of it, combined with people taking profits who bought the rumor.
Or new institutional buying coming in.
Exactly. All that can lead to sharp, unpredictable price swings. It's that classic buy the rumor, sell the news dynamic playing out. But with ETFs, there's also that possibility of sustained buying pressure afterwards. So savvy traders will be watching closely, looking for those movements, ready to potentially capitalize.
Okay, volatility is expected. What else?
Alongside the volatility, you'll almost certainly see the emergence of arbitrage opportunities.
The price differences.
Right. This is where traders try to make quick profits from temporary mismatches in price between the brand new ETF trading on a traditional stock exchange and the underlying asset XRP or Dogecoin trading on various crypto exchanges. So, for example, if the XRP ETF is trading at, say, $1.05 on the stock market, but actual XRP is only $1 on a crypto exchange.
Buy low, sell high instantly.
Essentially, yeah. Savvy traders, and especially authorized participants, often big financial institutions, can simultaneously buy the cheaper XRP and sell the slightly pricier ETF shares, locking in that small difference. And this mechanism, this arbitrage, it's actually really important. It helps keep the ETF's price honest. It forces it to track the underlying asset closely. It ensures market efficiency.
Got it. Keeps things aligned. What else for traders?
Well, these ETFs could definitely lead to noticeable shifts in dominance charts. Our sources really emphasize this. By watching the altcoin dominance chart, traders can get crucial insights into how capital is flowing within the broader crypto market.
So which buckets are filling up?
Precisely. The altcoin dominance chart shows the percentage of the total crypto market cap that belongs to altcoins, everything except Bitcoin. If these new XRP and Doge ETFs attract substantial money, we might see Bitcoin's dominance dip, or maybe Ethereum's. Or perhaps capital just reallocates from other altcoins into XRP and Doge, depending on what institutions prefer.
It's like a real-time indicator.
It really is an indicator of where that institutional money is flowing within the digital asset world, almost like a thermometer reading for institutional sentiment towards different crypto categories.
Okay, that's helpful. Anything else for the sophisticated trader?
Yeah, one more for those really deep in market analysis. Our sources suggest closely analyzing options and derivatives data, specifically looking at something called implied volatility around the ETF launch.
Implied volatility. Okay, break that down.
So implied volatility isn't about how much the price has moved historically. It's about how much the market expects it to move in the future. It's baked into the price of options contracts.
Like the market's betting on future swings.
Exactly. If options contracts for XRP or DOGE suddenly get really expensive, it implies the market has a high expectation for big price swings soon. It signals significant anticipation, maybe nervousness. It's like the market's collective gut feeling about upcoming turbulence.
So how would a trader use that?
Well, for instance, a sharp rise in the price of options far away from the current price known as out-of-the-money calls or puts that could signal traders are pricing in a much larger move than usual. Tracking this implied volatility gives insights into market sentiment, expected price swings. It allows traders to position themselves strategically, maybe hedge their bets, manage risk more effectively. It's a powerful way to get a pulse on the market's foresight.
That's a really good breakdown of the immediate trading mechanics.
Yeah.
But you hit on something crucial there, the broader implications. The ripples from this, they're going to spread much further than just these two assets, aren't they? It really feels like we're watching a foundational reordering of the financial landscape. So stepping back again, what does this all mean for the bigger picture? For Web3, for global finance?
You're absolutely right. It extends far, far beyond just XRP and Dogecoin. This feels like a significant inflection point, a real convergence moment between traditional finance and Web3. Let's revisit that accelerated ETF domino effect, but think bigger picture now. Our sources really underscore this. Once regulators have approved 2 altcoins for ETFs, especially 2 with such different profiles, right? A utility token with legal clarity and a culturally massive meme coin with huge retail liquidity.
It sets a powerful precedent.
Incredibly strong. This likely isn't a one-off. It potentially speeds up the whole process for many other digital assets hoping for an ETF. The regulatory blueprint seems clearer now. The operational infrastructure is being built. The comfort level within regulatory bodies seems higher. And the pressure from asset managers.
They'll want to offer more products, compete.
Exactly. They'll compete fiercely for that institutional capital by offering diverse products. So this could lead to a rapid expansion of investment options across the altcoin spectrum, potentially much faster than anyone thought possible even a year ago.
Okay, faster domino effect. What else?
This also represents a fundamental narrative shift. And the implication here is profound. Meme coins and utility tokens alike are becoming institutional products.
That really changes how people think about crypto.
Fundamentally, for years, traditional finance often looked at crypto with, well, a mix of skepticism, confusion, sometimes outright dismissal, often just lumping everything into one risky bucket. The very idea of a meme coin like Dogecoin or even a utility token like XRP being available through a regulated traditional ETF, that was almost unimaginable just a few short years ago.
It breaks down old barriers.
It really does. It potentially dismantles that long-held skepticism in traditional finance. It forces a reevaluation of what is a legitimate investable asset class in this digital age. It's an acknowledgement of the market demand, the tech innovation, the growing maturity of these ecosystems. It moves the conversation beyond just Bitcoin as digital gold.
So a deeper acceptance.
Yeah, and that leads to the next point, a deepening global finance integration. This feels like a critical step, maybe an irreversible one, towards a much more interconnected financial ecosystem. We're seeing traditional markets finally merging with Web3 assets. This isn't just a niche thing anymore. It's becoming systemic integration.
Like the MicroStrategy example with Bitcoin.
Exactly. We've already seen strong proof of institutional domino effects, starting with Bitcoin, like MicroStrategy and corporate BTC adoption, where public companies put Bitcoin on their balance sheets. Now, that institutionalization is clearly extending to altcoins. It suggests broader acceptance, more diverse allocation strategies from corporate treasuries, pension funds, big global investment funds. And this integration means more capital, yes, but also more sophisticated infrastructure, better liquidity.
Yeah.
Ultimately, a more robust market for digital assets, solidifying their place in the global financial system. It's a real fusion of 2 worlds that were previously quite separate.
Fusion, I like that. And how does this change who owns these assets?
That's the final big implication. Evolving investor demographics and holdings. We're likely looking at fundamental changes in institutional versus retail holdings. Traditionally, altcoin markets have been heavily retail-driven, right? Passionate communities driving a lot of the price action, the distribution.
Yeah, the diamond hands crowd.
Right. But with potentially significant institutional inflows coming through these new ETFs, we can expect pretty dramatic shifts in wallet distribution. Who holds what? Our sources suggest looking at things like Masari altcoin adoption studies as a way to analyze these potential shifts. As institutions acquire substantial positions via these ETFs, the balance of power could shift. Liquidity provision might change. Even governance influence within these ecosystems could evolve significantly.
Especially for something like Dogecoin.
Exactly. For projects like Dogecoin, it could mean maybe less susceptibility to sudden retail mood swings, which could be stabilizing. But it also raises questions about a potential shift in its core, decentralized, community-driven ethos. So it's not just about price movements, it's about the very structure of ownership and market participation starting to evolve.
That is a lot to process.
Yeah.
A genuine paradigm shift unfolding right before us. Okay, as we start to wrap up this deep dive, for you listening right now, what are the absolute crucial things, the key metrics, the observations you should be paying attention to as these pioneering altcoin ETFs roll out and in the months ahead? What tells us if this is a truly sustained transformation or maybe just another blip in the wild world of crypto?
That's the million-dollar question, isn't it? And one every informed investor or observer should definitely be asking. Okay, a few key things to watch. First and foremost, you absolutely want to monitor the ETF inflows comparison very closely. Compare the initial money flowing into the XRP and Doge ETFs against those benchmarks set by the Bitcoin and Ethereum ETF launches.
Are they meeting expectations? Exceeding? Falling short?
Exactly. Strong inflows would signal robust institutional appetite, validating the market's enthusiasm. Weaker inflows might suggest maybe a more cautious approach, slower adoption than some hoped for. For example, if XRP's ETF sees inflows that look similar to the early Ethereum ETF numbers, that signals pretty serious institutional belief. This comparison gives us a vital sense of the scale of this impact.
Okay, watch the money flow. What's number two?
Second, pay very close attention to the post-launch price action. It's absolutely critical to distinguish between that initial pre-launch speculation, the hype driving prices up beforehand, and the actual sustained post-launch performance of XRP and Doge.
The difference between hype and real demand.
Precisely. Is this going to be a classic buy the rumor, sell the news scenario? Prices spike on launch day, then correct sharply as the early profit takers get out? Or are these ETFs genuinely driving long-term demand? Are we seeing more sustained price appreciation, maybe more stability, fueled by ongoing institutional buying? Analyzing the performance in the weeks, the months after the launch will be key. That tells us if these products are just short-term trading catalysts or truly fundamental demand drivers for the assets themselves.
Got it. Look beyond launch day. What's third?
Third, and we touched on this, but it's worth hammering home, the necessity of tracking the altcoin dominance chart. This chart is your guide. It helps you see how capital is shifting within the entire crypto market. If the XRP and Doge ETFs are really successful, we might see their individual dominance percentages climb, maybe even a broader rise in overall altcoin dominance.
Suggesting money is moving from BTC to this next tier.
Potentially, yes. Or just new money favoring these alt ETFs. Watch for clear trends on that chart. Does the slice of the pie held by altcoins steadily grow? It reveals which assets are truly benefiting most from this new wave of institutional interest, and where the collective smart money seems to be placing its bets.
Okay, dominance chart. What else should we track?
Fourth, keep a very keen eye on regulatory scrutiny and future filings. Pay close attention to any future SEC filings for ETF approvals for other altcoins.
Watching for the next dominoes.
Exactly. These will be incredibly important indicators of that next potential wave of digital asset integration into traditional finance. Every new filing, and especially every new approval, signals a continued evolution in regulatory thinking and market acceptance. You'll want to watch not just if more altcoins apply, but which ones. And look at the arguments they use, the frameworks in their applications. They'll likely build on the precedents set by XRP and Dogecoin. It gives us that forward-looking view of the ETF domino effect actually playing out.
Makes sense. Look for the pipeline. And finally,
just briefly, it's worth remembering Grayscale Trust's foresight. Our sources remind us that Grayscale, through their various trusts like the Grayscale XRP Trust or the Grayscale Dogecoin Trust, they actually showcased early investor demand for altcoin exposure long before these ETFs were even really feasible.
right. They were the main regulated way in for a while.
They were. They allowed accredited investors to get exposure, even though it came with things like premiums and lockup periods. So the current ETF approvals for XRP and Dogecoin, you can kind of see them as a powerful validation of those early signals Grayscale picked up on. It reinforces that there's been a long-term institutional appetite for diverse digital assets. It shows the demand wasn't just some fleeting trend. It was a foundational shift that has now finally found its more formalized, more accessible product structure in the ETF. It's proof of persistent demand finally breaking through those regulatory barriers.
Wow, that really brings it full circle. What an incredibly thorough deep dive. We've covered so much ground. The huge legitimacy boost these ETFs represent, the critical regulatory shifts they signal, and this unprecedented access for institutional money into the altcoin market. It really hammers home that this isn't just a story about two specific coins. It feels like a major chapter, a truly groundbreaking one in this ongoing story of finance and technology merging.
It truly feels that way. These XRP and Dogecoin ETF launches, they really do mark a pivotal moment, a clear acceleration point in the convergence of traditional finance and the Web3 ecosystem. It's a historical event, honestly, and the ripples will likely be felt for years. It sets a precedent that will undoubtedly reshape investment portfolios, market structures, probably globally. However, and this is perhaps something to really chew on, this profound integration of altcoins into traditional finance. Yes, it undeniably brings legitimacy, it brings significant capital, but it also raises a really important question, doesn't it? How will the increasing influence of these large institutional players reshape the actual culture, the developmental trajectory of these digital assets, especially for projects like Dogecoin, which were literally born from grassroots decentralized communities?
That's a fascinating tension.
It is. It leaves us to ponder that delicate balance, between achieving mainstream adoption and preserving the core ethos, the original spirit of crypto.
That is a powerful thought to leave us with. A real paradox maybe at the heart of this whole evolution. Because while the institutional money, the legitimacy, it's exciting. That spirit of decentralization, of community, that's what drew so many people to crypto in the first place, isn't it? As we watch these ETFs roll out, that underlying tension, well, that's something we'll all be observing very, very closely. Until next time, keep digging deeper.